Hey again. Alright, welcome back. I sure hope that you're not getting too much information overload. Alright, so okay, let's move on to another video. And this one's going to be the bullish free outside up. Alright, it also consists of three candles as well, and the downwards trend as well. It needs to be established first. Okay, so here is our downwards trend, and then we're going to have a bear bar like so. And then we're going to have a bull bar that basically engulfs the first day's bar, and then you have another one as well. So here are your highs. Okay, so the highs are being broken on each day. The next thing you need to do is wait for a confirmation. Alright, and the confirmation, you either need to close higher than the previous day's high, or you want the wicks high to be higher than the previous high. Okay, alright, and this should keep going up if this rings off true. Okay, let's go ahead and show you what it looks like on the charts itself. Alright, and here is the free outside up that we was just talking about in the previous video. And again, here we've got, it's like a bullish engulfing pattern. I don't think we've actually got to yet, but the bullish engulfing pattern, what this basically means is that it comprises of two candles, the bullish engulfing pattern. Okay, and what that means is that the second candle, the real body, engulfs the first real body. Okay, you can see the blue matter here is a lot larger than the red matter, so it basically engulfs it. Alright, then you have this third candle, which is the third candle of the free outside up formation. And this candle here, the black one I've got my cursor over, this should be up here. This should be up the top. The high should be higher than this high, or preferably the close should be higher than that high. Okay, but in this particular instance it didn't. It actually come through and says, no, we're happy with the market sentiment, we still want to continue this downtrend. Okay, so here is where it's come in, and then you can go short right there and take it as far as low as it can go. You will need to look back to your left obviously to see how far you can take that particular currency pair. Alright, let me just pause for a moment and see if we can find you some more scenarios. Okay, here we go. We've started from up the top here of the high. We've come all the way down here to form like a new support level from its previous support area. Well, this is actually like a minor support. Okay, and here we've got like this bearish, this bullish engulfing pattern happening right here, and then this bullish engulfing pattern is then confirmed on the next candle. Now the free outside up is really like a confirmation of the bullish engulfing pattern, but you know, you need to really take those, you know, with a pinch of salt sometimes, you know, and be careful when, you know, how many candles you go into for the confirmation. This one here, this one's okay, the free outside up. This will do perfectly fine. You can see that how this high closed up higher than that one, but it doesn't look like the body, you know, the real body closed up higher. It looks like it closed lower, but it still made a bigger high. Well, this is still market sentiment. This is basically the little push down that you see there, and it formed a little black body down there. That is basically still sentiment from this move all the way down. It's still trying to push it down. It's not happy with it. Alright, but we've had two long candles, and you see how long these candles are? They also play a huge role as well. If you get smaller candles, like if this bar came down a little bit, but it still formed this free outside up formation, but the candles were a little bit smaller, then you're not going to get this huge move all the way up. You'll probably get around about half of it. So the candle sizes are also very important as well. Okay, so yeah, so here we've got this confirmation here. It's not a perfect confirmation. It would have been nice if we had another up bar, but it turned into be a down bar here. But the sentiment is still, you know, in favor of the bulls. Okay. Alright, so let's see if we can pause one more time and show you some other examples before we move on to more videos. Okay, here's one on the 4-hour USD Japanese yen, and you can see how the candles here are quite small this time. You know, so we would go long on the next bar on this black bar here, but because it closed lower, it's a failed 3 outside up bar formation. So then we can just go short on this bar, on this particular bar right here. Alright, every time it fails on the next bar, we just do the opposite. Alright, let's see if we can find some more examples. Also notice as well that that other 3 outside up was actually sitting right on the resistance level as well. Like same here. If this actually confirmed higher, I would be skeptical to take that on, because here are some other highs as well. If we go back, we can see there's some support there. So, this wouldn't have done us any good if we wanted to get in on this 3 outside up. But it didn't confirm anyway, so we would have gone short. Alright, and we would have got out, I don't know, there's 43 pips worth there, so you would have got out somewhere maybe along here towards the next area of support. So, yeah, so there you go. Alright, so that's the 3 outside up formation. Alright, and play around with that for a bit, and I will see you very soon in the next video. Bye for now.